Hi there. Hi, everyone. Thanks for joining us today. This is our second live roundtable for Douglas, and I'm thrilled to be able to be with you today on a Friday and talk about fundraising for investment and funding. We've got a great group of entrepreneurs and investors here to give you a little bit of insight into their processes and their journeys and everything else. So the first part of the conversation, I'll ask Faizan from LetHub and Aki from Save the Sea to talk a little bit about the early stage of their business, and then we'll open it up to James DeGreef and Stephanie Andrew to talk about investment and later stages of rounds of funding. So I'm going to ask our panelists to join us now and introduce themselves quickly. Again, I'm Carla Sorrell, editor of Douglas Magazine, and thanks for joining us today. We've got Aki, James, Stephanie, and Faizan's about to reveal himself. Exciting. Aki, do you want to quickly introduce yourself? I'll go Aki, Faizan, James, then Steph, and then we'll ask Aki and then Faizan to speak a little bit about the first early stage of their businesses, Save the Sea and LetHub.
Hi, everybody. My name is Aki Kaltenbach. I'm the founder of Save the Sea. We are a plant-based seafood company based here in Victoria. We have one product in market right now, a vegan smoked salmon made from carrots. We're in 75 retailers across BC and Alberta, including Whole Foods, Choices, Spud, Very Good Butchers, and currently working on our second plant-based seafood product, a canned tuna analog, and really looking to build a global plant-based seafood company.
Thanks, Aki. Faizan.
Sure. Hey, my name is Faizan. I'm the founder at LetHub. So we are a Victoria-based startup. We focus on AI mostly, and now what we do is we help people find rental apartments like faster and interact with landlords and property managers without doing much. So we've been in business for a while, but we recently closed a funding round, and that's why we're here to help sort of share the knowledge. And yeah, so looking forward to having a chat and sharing whatever we have for now.
Thanks, James.
Hello. So I guess I'm a early stage investor, both like an angel investor and a seed venture capitalist. So I have a lot of experience with software companies. I did one myself, and then I mostly invest in the software, but I would invest into tasty seafood analogs, or hope to. So I do a lot of investing with Stephanie, a cohort of other angel investors in Victoria and Vancouver, and a bunch of early stage funds. And then depending on the opportunity and the stage, I'm also a venture partner with Good News Ventures, a VC firm out of Toronto, and have a lot of connections in Toronto, Seattle, and San Francisco for further financing. And I guess with Stephanie and a number of other Victoria people, we've just recently launched a seed venture capital fund based in Victoria called Cindicates. So we've done 4 investments so far this year into LetHub, Vin Auto, Joni, and Simbi. And we're taking an investment right now and deploying into really good startups in Victoria and Vancouver.
That's great. Thanks, Steph.
Hi, I'm Stephanie. Good to see everyone. I guess I've had, I don't know, over a decade, and I come from the finance side in alternative finance, venture capital, alternative debt. I'm an angel investor and also a co-founder of Capital Investment Network for bringing resources for facilitating angel investing and to great local businesses, and then founding partner of Women's Equity Lab, which is now a group of over 80 women that collectively pool capital and invest together, learn angel investing together. It's a lot of fun. And then I work a lot with James with Cindicates and Cin too. James is the chair. Yeah, and that's what I do.
Great. Well, thanks so much again for everyone for being here. Aki, we're going to start the conversation by talking a little bit to Aki and Faizan about what it was like to start out. So that kind of messy early phase where funding options aren't totally clear. And, you know, that's kind of little pots of seed funding, family and friends, how they got their business ideas off the ground before they entered more formal stages of funding later. So Aki, do you mind starting today?
Yeah, no problem. So I founded, I mean, Save the Sea was a side hustle for a long time. I'm, you know, almost embarrassed to say for how long. I've been, maybe lost track a little bit, but I came up with the idea while I was running my family's Japanese restaurants. I became vegan. I was looking for alternatives and couldn't find any, so started developing my own. My first customer was a very good butcher, and at that point was totally bootstrapped. The first amount of money I took was actually a loan. It's through an organization called Futurepreneur. I believe it's a government program. You have to be under, the criteria is super minimal, under 40, no collateral, and it's still personally guaranteed, but you don't have to like put your house or your car up for it. And I got 15 grand through there. And yeah, that's how I started kind of operating the business, but kind of quickly learned how capital intensive a CPG company, a consumer packaged goods company is. You know, I was the person making it, delivering it, selling it, and that's only so scalable. So I decided to do a pre-seed raise and had never raised any money before. So didn't, you know, had friends who had raised money, but mainly in software. I worked at Hootsuite before and raising money. So it didn't have the same network of food investors. So I actually joined an organization called Forum for Women Entrepreneurs. They have a program called Pitch for the Purse. And as part of that program, they help you put together a deck. And then if you make it in as a semi-finalist, you have the opportunity to pitch to a group of, you know, angel investors. And in that preparation, they kind of help you come up with, you know, the story and the narrative. And so kicked off that event, and my goal was to raise 500,000. Sorry, my goal was actually 350,000 at a $1.75 million valuation. And after that event, I actually got my first check like within days. And so I was, you know, people talk about how hard fundraising was, and I was like, wow, this is so easy. You know, I'm gonna close this round in days or weeks at the most. Little did I know that it would take another 6 months before I got my next check. So all in all, I believe it took me almost a year to get that first check and then to close the round. But at the end, near the end, I ended up far exceeding my round, and ended up closing $525,000. But you know, I spoke to over 100 potential investors, pitched, you know, just as many times, created just as many decks, and sent just as many samples. So yeah, a lot of blood, sweat, and tears. And I don't think it has to be like that. I think that there's lots of ways you can shortcut that.
Can I just ask you in that time, you know, what and how did you figure out what your financing target was? You know, for those who don't have an MBA or haven't done that kind of background, yeah, what would you recommend?
Yeah, so I early on, I was connected to a really great lawyer who specializes in the F&B space, and that's how I actually came up with my valuation. Sorry, and I know your question is how did I come up with the amount of money, but how I came up with the amount of money was really, it was based on the valuation, because I knew how much I was willing to sell, what percentage I was willing to sell of the company. And so I was somewhat limited to what I could raise because I didn't want to dilute myself so much so early on. So that's how I came up with it, and obviously had a plan for those proceeds that I raised, but that's how I came up with it.
No, great, thank you. Faizan, would you like to give us a little bit of insight into those early days that might seem a ways away now?
I would still consider ourselves in the early days, but I think I can't top what Aki sort of shared, but this is awesome. Yeah, for us, like, so I originally, I was, so to give you a bit of a background, I was born and brought up in Pakistan, and like kind of left a bit when I was like 17 when I went to the UK and so on. And I had like some experience like with starting companies. So I had like graduated earlier than my friends. So I started this company when I think I was 20 or something. And so we grew the company, and it was like a service-based company. We used to sell SEO products in Greater Toronto, like from Pakistan. So and that sort of like trained me a lot in terms of how to run a business, which is more of a B2B business. And like, it's just like life sort of helping you, training you, and like understanding finances and everything, how to pay salaries and so on. Like, so that's sort of what how I started off. Then I started like another, so like a construction sort of marquee company after that. And then I had moved to Victoria for my MBA, and the MBA was helpful, but I would not like, for people who are considering starting a business, I would not like, I would say advise not to just like worry about the MBA part. I would worry about the actual your passion and what do you really want to do in life kind of thing. So yeah, with us, it was quite a journey. I like sort of was looking for a problem to solve, and I've a couple of years back, it was just very hard to find a place. So I was like, why is this happening? So we did some, I would just like go about and like talk to people all over Canada, like even travel to Toronto and talk to property managers. Well, I would take the first ferry to Vancouver, talk to like potential customers and so on. At that time was just like it's a pitch deck and like a slide deck for customers, no real product. So I decided to sort of set some money aside and just like build a product, like to start my side hustle, and then sort of bootstrap it until we had like a version 1 ready. And then I saw this sort of like an event posted on LinkedIn. It was, I guess Stephanie would remember this, but it was like Cindicates, sort of like an event at the Victoria golf course. And that's when I was like, hey, Stephanie, can I present? And that's where I just went there and presented, and a few like judges were there who were like who invest in companies, but at that time it was like very early stage. But I met someone from that event who gave us like a $10,000 check, and then that sort of started the process of me like figuring out what's what to do next. And then I met another person who put in another 15K, and that was my 25K round, my first ever round. And then that's how and put my money in as well, and then that's how we started. In terms of raising capital, it was I don't want to take too much of the time here, but raising capital, I think if the problem resonates with the person and like the drive is there in terms of the entrepreneur, I think investors are definitely looking for that. And like, are you serious? And specifically for immigrants like myself, you need to like build trust. I am with time, and people will trust you based on how driven you are, and like, do you really want to take the company to the next level and so on. One trick we did was, I want to share this because and maybe like our investors don't know about this, but we would make a list of all of our investors, and I would get one of my early marketing team members to post product updates of our product, and investors receive those emails as customers, and then that keeps like in the back of the mind, they know there's something happening with LetHub, but they haven't really talked to me. So I would create a list of like, I think it was like 100 or 150 investors, and this is like early days version 1. And yeah, that's sort of how I started. And then I met and met James through like another advisor of ours, and then that's sort of like helped us tap into the network here in Victoria, and also like just generally in Vancouver and Victoria. And we got some initial cash, we proved ourselves, and sort of raised some money in the last I think 6 weeks or so. We were able to do close to $500,000 in cash and with equity, and yeah, and then now we're like towards the next stage of building the company and building an amazing product, and we're launching a few other things. Sorry about the long intro, but hopefully it made sense.
Well, it's great. I mean, we were talking a little bit before the webinar started about how messy it is that in the early phase. And I think Aki and Faizan have both kind of given a bit of insight into that hustle that was going in behind the scenes to get a few of those first checks and find out where the money is going to come from. And I think, James, maybe you could weigh in on what your perspective as an investor is on finding people and connecting with them in that that kind of almost pre-seed funding stage, what you're looking for, and what, you know, what kinds of experience you've seen where it really works.
Yeah, so I get involved with a lot of early stage deals in Victoria. So right now I'm mentoring 2 startups that are like, neither are actually even incorporated, but I'm just kind of helping them think through the early stages of their startup planning, and then eventually how to think through the financing and stuff. But I've sort of run into a number of startups who aren't at that real beginning stage, but are sort of a year or 2 in. And when I meet with them, they're kind of pitching me hard kind of right away. And usually they're not what I would consider investor ready for like angel investors. And also startups are just incredibly messy. And now that I'm 46 years old, that's a word that I just love to use everywhere, is messy. Because like every startup, or actually every company, every organization I'm involved with looks really good on the outside, but on the inside is just messy. There's just, but startups are like especially messy. And so you're in your startup, you're just thinking it's a grind. Why is it so hard for me? And you look at everyone else's websites or press releases and, oh, they're killing it. But every startup is messy. And almost every early stage financing that I've seen or been a part of has been piecemeal and messy as well. And so I think I like to get to know founders over a period of time, and I'm partly busy as well, so it's not going to happen within a month. But in that sort of early messy stage, the founders, like how entrepreneurial they are, will come across over a series of meetings, and I'll get to see how I'll be able to extrapolate from the progress they're making over time as well, and also sort of like our working relationship. Because usually when I invest in early stage deals in Victoria, I like to have a relationship already established, and because I know like my money's somewhat valuable, but I can help people get access to other money. But like, I feel with a lot of these deals, I'm going to have to be involved somewhat in terms of giving some of my experience, but also like what I'm seeing from other startups and best practices, or what's working, what's not, and sort of helping them get to an investable situation. So I would say probably quite early, just start networking, and not hard selling your startup, and connecting with the capital investment network via tech. Capital investment network, we have this service that we offer startups in Victoria, we call Victoria Vipers. And so through the capital investment network, capital investment is like this angel network in Victoria that Stephanie and Peter Elkins started, and over time it has grown. And we do a bunch of different events and like pitch events, networking events, etc. But we have this thing called Victoria Vipers that you can go to our website and apply for. And internally, we talk amongst ourselves with different investors, and not every inquiry, but a number of them, we will then have like an hour or 2 hour meeting to kind of, not for you to pitch us, but for us to understand what you're doing and to give advice in terms of how to think about your startup, but also how to prep for financing, for the early stage fundraising. So I think some of the key points is it's messy, it's going to be a grind. Investors kind of look at how you are doing your fundraising as an indicator for like future company success too. And so just build relationships early on, ask a lot of questions, show early progress. And then another thing is early stage investing, like there's a lot of money for late stage investing, like kind of from the seed round, but for sure like Series A and beyond. There's just a lot of money out there. And that's where more like the finance types kick in. They can look at all the numbers, like all the acronyms like MRR and like, I don't know what else, a bunch of really cool stuff they look at. But at the early stage, it's less about the numbers because there aren't really numbers. And so you have to have sort of more that entrepreneurial gut to like do good early stage investing. So it is, a lot of it is art. A lot of it is pattern recognition and done by experience. A lot of it is you got to put in the time, meet a lot of people as an investor, like really get to know the entrepreneurs. And yeah, just the early stage fundraising, it is just a lot of work for the entrepreneurs. Partly that's why we have Capital Investment Network, Women's Equity Lab, our new fund, Cindicates, and the Victoria Vipers program is to try and help startups in Victoria. It's still going to be messy for sure, but try to have it be a bit more smoother and good advice and be like good community actors in terms of supporting the next wave of awesome startups in Victoria and beyond. So yeah, I think takeaway. So it's going to be messy, relationship based, and connect with like Viatech, Capital Investment Network, Women's Equity Lab, and our new fund, Cindicates.
There's a lot in Victoria, these organizations that are a starting point. And I think we were all talking a little bit before the webinar about, reaching out it's a lot of people know each other already, but these organizations exist as a starting point, and their doors are open to having a conversation with you if you haven't developed your network yet. And I think what Aki said earlier is really helps that process of thinking about how you do develop your network, starting one program, starting another, getting those introductions. And of course, that's going to be slow if you don't kind of have that already. But there's a lot of groups here that will help you look in the right direction. Stephanie, I was wondering on the back of that, those amazing organizations that both of you are involved in, is why do investors invest? You're doing the work with Women's Equity Lab is educational for women who want to learn to invest and learn what the value and benefits of putting their money into investments are. And as well, Cindicates, right, is to get to create a community fund to let other people kind of put their money into to raising money through investment. Could you talk a little bit about that?
Why people invest? Yeah. I think one of the main reasons of investing at this stage is, you want to get in early. There's the obvious financial gains that are to be had with the right, diversified portfolio. But I think a big driver for a lot of angels is impact and being part of the innovation occurring and it's exciting to be part of all these different companies and all the exciting things that they're developing to change the world. And I think, yeah, it's amazing to just play a role in some way in what these guys are doing and to interact with incredible entrepreneurs and like Aki and Faizan and help them, you know, create awesome products. I think those are key reasons that, you know, that to invest at this stage, like the seed and pre-seed stage for me.
And you know what do you have anything you could say about the difference between investing as an individual and in the groups that you invest in for both of you?
Well, so for me, in terms of with Women's Equity Lab is a very everyone's an equal participant in the decision making. It's an incredible process because everybody comes in with a different perspective and a different experience, different expertise, and we combine that knowledge when we look at every investment opportunity that we're making. So it makes for a very interesting investment process as we're evaluating different investment opportunities. I learn a ton from the people around the room. And then once we invest in a company, then that expertise goes with the capital. So behind, you know, what is a relatively small check, there is all that expertise from marketing to HR, PR, finance, law, you know, all these different, so that expertise is able to inform and connect the companies that we invest in, and so that's investing as a group. And same with Cindicates. Cindicates is an amazing group of entrepreneurs turned investors like James, and just a really great smart group of people that, yeah, like often if James is interested in investing, that's a good green flag that I will invest to. So anyways, great group of people that understand many different industries, mostly tech. Yeah, make some great investment decisions. And then personally, I tend to invest in quite early stage. Generally, I'd say most of the investments I've made have been in women-led companies. Just having investing in companies that are where the founder is open and trustworthy and committed and passionate, high energy about what they're doing. Yeah, products that I understand. So there's areas I will stay away from, like cryptocurrency, and maybe that I should be there, but I don't understand it. Yeah, and so it's exciting. So one of my earliest investments, so my super early investments actually were I started investing in, my sister's an entrepreneur, Emiel, and I started investing in, and Aki actually and Emiel had a really early company. What was it called?
Field Trip.
Field Trip. Anyway, so I was an early investor in that. And then after that, I invested in a company at a $1 to $1.5 million valuation. It was super early. They were only in one city, and they had 100,000 in revenue or something. And then today, this was probably in 2016, and now they're doing $1 million a month. And so the whole value of the company they do in a month, and they're growing still. So yeah, it's exciting to be part of that journey.
It's really interesting what you're saying about, which you've touched on, the expertise and the investors. So, it's not just the money that you're looking for, that cold hard cash hand over the check, but like, what are you getting from your investors, and what are your investors bringing to the table in terms of advice, and how are they, how much of a role do they have in your company? Aki and Faizan, I was wondering if you could kind of share anything on that. It's not, beyond the money, what are you looking for in people who are putting the money in?
Yeah, I mean, people often, and when you're fundraising, obviously everybody has lots of advice, a lot of it contradictory, but that is probably one of the most popular pieces of advice is, make sure they're the right fit, which it's hard to understand when you need money, but you understand the value of that advice once you're in deep. And I luckily have no horror. I've heard many horror stories. I don't have any to share. I only have positive stories, but I do really think it's because I did try to be as diligent as possible. And my criteria was, I've pride our cap. So we have 17 investors, Well being one of them, which is obviously made up of a group of 25 women in Vancouver. But over half the cap table is women. So I was very actively, and that's probably because I'm a female-owned company, attract more female investors, but over half our cap table is made up of women. And I was looking for some, they're not all plant-based experts, because most of my investors are angels based in Vancouver and Victoria, and there's not maybe as much of that expertise as in maybe some other cities. But I was seeking some expertise in CPG, plant-based industries.
And have you tapped into that expertise?
Absolutely, yeah. One of my early investors was the co-founder of Dea, who not only has been hugely helpful in terms of advice around product development, but was also added some credibility to my cap table as I went to close my raise. He was very helpful in that journey. And then have also tapped into some of the expertise there around marketing. There's definitely some marketing expertise in there. And also there's this, the other piece that's what I love about Well specifically actually is, so yes, it's really great to get advice on, how to build a financial model and, can you make an intro to that potential VC? But there's the strength of the crowd as well. And a lot of my asks are little, like, can you go into Whole Foods and or can you go into this Whole Foods that doesn't carry my product because it's a small store and ask for my product? Because if 20 people do that, they will make an order, and that's hugely impactful. And that does, and that just requires numbers. And so when you can leverage a group like that, it's pretty powerful.
I've just got a question that's come in, Aki and Faizan. Maybe you could take this one to start, Faizan. What market research did you do to gain insights on the potential need for your product? I mean, Faizan spoke about that a little bit about his traveling around Canada and really doing that interview. But maybe it's not just what market research you did, but how did that market research benefit and give you the case for your investors?
Sure. Yeah, for me, I think, as I mentioned, I was coming up from sort of an entrepreneurial sort of background, having a few startups in the past. I sort of understand, and I still sort of struggle with that as well. Because as entrepreneurs, it's so easy to be delusional that you come up with an idea and you think the world really wants it, and you think everyone's going to be snatching their product off of your hands, and paying you twice the price. And it's just when you realize is that when you build a product and then go into the market, you realize it's not the case, and you pivot. And tons of companies have pivoted, selling the same product to somewhat different market and then being very successful at that. Maybe it's the market. So for us, I think what I did was that it's in business school, you're taught to do surveys. You create a survey and go to people, and then be hey, do you have this problem? How often do you have this problem? All the typical questions, and you do it. People are happy to do that. And if you add a gift card to it, people will be happy to provide that. But I think the actual test of an actual an idea is when people pay. So I think with us, we were lucky to, I think, if I remember right, someone gave us $100 to build the first version. This was just we didn't have a product. I just showed them a slide deck, and they were yeah, I'll pay $100 per month for this. And then, and we I literally just took cash from them. And they're not our customer right now, because they don't we don't solve the problem for them, but it was a different problem. So I think that was like the moment where I sort of realized that, you know, the best validation would be when someone pay. And also talking to customers and not asking them to pay and just working with them until or their teams until you figure out that okay, so this really does solve a problem, and I am actually going down the right path. Even customers, like even companies with $1 million in revenue, are still don't really achieve product market fit because they like plateau at that point, and they don't not really growing. So maybe there's a reason behind that. So yeah, I guess long story short is like test as much as you can without being delusional about your idea. And then once you're like, you've convinced yourself that okay, this thing is good, then you should go all in. Once you're convinced yourself, like be very critical about it.
That's great. Thank you so much. Aki, someone's just asked a little bit about a comment you made when you were in your introduction. You kind of said there might have been an easier way to raise if you did it again. And I guess that's in light of you saying you spoke to hundreds of people. Could you go into like, what would you do if you did it again?
Yeah, so one, you know, Faizan touched on it. There's some, like you do hit momentum. You know, the first check I got instantly, and then I didn't get the next one until 6 months. And then the one after that came maybe a little bit shorter. One thing that I didn't know about were these kind of angel investment networks that exist. There's, you know, a handful of them in Vancouver, a handful of them in Victoria. And it seems like when you pitch at one, then it gives you access to others, which again, I just had no idea. And so Angel Investment Network was the first one I pitched at, and that opened a bunch of doors. And I found that I ended up pitching at, you know, 5 or 6 by the end of it. And each one I would meet another investor or an investor that would intro to me and to another person who did write a check. So I wish I'd known about those networks maybe earlier on. And I would also say when I did go to raise, although I mentioned that course I took through Forum for Women Entrepreneurs, I didn't have all the pieces in place. So I had a deck, but I didn't have a financial model. You know, I didn't have a data room. And so I didn't have, you know, people would ask me for these. And so had I had all those pieces, I might have been able to just compress that time a little bit.
That's great. I think that's really, really helpful. And, you know, we could all learn from what we would do again if we were to do it again. James, I was wondering if you could talk a little bit about what Aki's just talked about, momentum. And we all mentioned momentum is really important in that process of building a company. And I was wondering if you could talk about it a little bit as well in terms of the different kind of formal stages of, you know, not formal, semi-formal stages of what seed is and what angel investment is. Because Aki did say earlier she wasn't ready for or you said something about not being ready for the angel investment stage. But maybe you could talk a little bit about momentum and those different kinds of stages of fundraising.
Yeah, so in the good old days, there used to be it was like friends and family round, angel round, and then like series A, so like preferred sharers with venture capitalists and stuff. And so nowadays the angel round has kind of been cracked into 2. Like they call it like the pre-seed and the seed. So now there's and this is kind of like the template, but it almost never goes this way. But there's like the friends and family round, do what you need to do to scrape some money by it. Maybe you get a couple early angels in there, and it's not really like a round. So it's not really a friends and family round. It's just do what you got to do to get some grants and all this kind of stuff. And then there's like the pre-seed round, and that's kind of like a formal round. And it's usually angel investors, maybe a few early funds go in as well. And then there's the seed round, which sometimes is preferred shares, sometimes are safes, common shares, and so Steph and I and the people we invest with, we're mostly doing the pre-seed and then also the seed round, sometimes very early into the friends and family round. But usually a company at the seed round has some level of traction and good dependable numbers, and it's a kind of product market fit-ish, depending on how you define that. And usually seed rounds, they take a bit of effort. Every financing does, but they kind of happen generally quickly. But it's the pre-seed round in BC that's the hard round to pull off. And that's what a number of these organizations and funds that we're involved with are really focused on. And so I would say think about your financing as like, there's that really messy stage. There's the pre-seed round. Once you have pre-seed money, usually like 500K or just north of that, then there's like, you got a early execution to get the numbers to do a nice seed round. And so fundraising it really is, it's a sales cycle. You have to think of it as like, it's almost like an enterprise sales effort, because in an enterprise sell, you have all these different stakeholders with all these different needs, and you're trying to like herd a bunch of cats to get them to make a decision together. And enterprise selling sucks. It's hard. I've done it a bunch. So in a sales cycle, there's top of funnel activity, and then there's managing the funnel to get to the close. So I would say, think of the relationship building, all that early stage prep stuff, getting an investor ready, getting the right lawyers and accountants involved, getting some good like corporate structuring, having some of the key, like a number of early customers and early good product, but a lot of it is like the networking stuff like that's going to take a while. And if you're trying to like fundraise too quickly in that, it's just going to go slow and be painful. So I think almost think of it like two stages. One is it's relationship, but also scraping together funding to survive and grow. But then at a certain point, when you're investor ready for your pre-seed round, it's nice to have one or a few lead investors at that point who can kind of guide you through how to do the fundraise. It's just the investors that have done it before just know the game. They have awesome networks. They know who's interested when. They know how to build early momentum. So the first half of the round is really hard. And the second half, just everyone jumps in, and usually you oversubscribe. And so how to build momentum, how to like work with like all the soft commits and the interests, and pulling it together, how to have good news through the fundraising effort. So you want to somehow not like fake it, but make sure you're not like saying all the good news, all the hype, all the excitement in the first meeting, and then they ask all the hard questions and it goes south. You want to save stuff and kind of like an enterprise sell. You want to leave good juicy value throughout the sales cycle. And it can be really hard if like things are going well and then you enter a fundraise and then like your traction's flat during the fundraise. So there's a number of things to kind of how to think through. And also like a lot of investors go away in the summer or like end of year too. So there's kind of two fundraising seasons, spring and fall. So you want to time it as well. Like, okay, we're going to start in September. Like we have all this relationship. So in September, we're going to start to push on some key investors and get some soft commits. But ultimately, like our goal is to close the financing like mid-November, knowing checks are going to come in November to December, and how to sort of time it out and make sure you're putting good effort into the fundraise too. And during that time, you're going to be less focused on your other business activities. So do you have co-founders or other people that can keep that business going while you're managing the fundraise? And there's just a lot to it. I don't want to take up all the time, but one other idea is there's for like a pre-seed or seed round, there's like when you can't fundraise, there's when you can nicely fundraise and it's exciting. And then there's that middle phase where it's like, you can, but it's a lot of effort. You're kind of still a bit too messy. And so founders will, because they need cash, try to fundraise when they're in that sort of harder middle phase. And it's best to like just keep relationship building during that phase and get to the point where you are at an exciting stage to then kick off the fundraising. Things you read on the interweb, all the blogs, all that kind of stuff, I would say like largely ignore that unless it's like a blog that's written by an angel investor or a seed fund in BC, because the funding environment in BC is very different than like Silicon Valley or New York or stuff like that. So those are some of the tips I would say.
Well, that's great. I love that the funding seasons are a bit like real estate. Spring and fall.
Yeah.
You focus on it for your business planning. I just want to let the audience know if you do have questions now. We've got about 10 minutes left. So we've had a couple come through, but obviously pop them in and I can share them with our panel now. Otherwise, Steph, I was just wondering, you know, in all this talk, you have an incredible financial background. What, if any, advice do you have for companies thinking about their valuations, thinking about breaking up the numbers of investors when they're looking in that seed round, when there's a couple people taking different percentages? Could you speak to that?
In terms of valuation? I mean, honestly, at this stage, valuation, I think, largely comes down to comparables and being aligned as a comparable in your geographic region and your industry. And, you know, that's if you're, and in terms of stage of business as well. So if you're an early stage business, very early revenue and like an e-commerce type business, or you know, there's a place that you'll come in, and if you're far outside of that, and there's a range. If you're really on the high end of that, you're going to have problems. If your valuation is really outside of that range of comparable, like not in line with the comparables, you're going to have problems fundraising. Whereas, you know, if you're valuing your company more, you know, in line with the, you know, more expectations, I think you'll have the liberty to choose investors more carefully. You won't have to take every check. Obviously, you want to dilute yourself with a really low valuation. But, you know, a lower valuation, doing a smaller round early on and choosing some really key investors can be quite powerful, as opposed to really just like putting yourself out there with a really high valuation, because you're going to have to you have to think down the line. And if, you know, you're going to have to do another raise, and you're going to have to do a raise at an increase to your previous round. This is all quite evident stuff to a lot of people, but you have to budget in some ways that valuation increase over time as you do those subsequent rounds. So you have to know those next milestones, your next raise timeline, and then budget in their valuation increase from that. So that's the simple answer to that. I don't know, James, what else can I add to that?
Yeah, I was just thinking about that. Like trust is so important in these early stage financings too. And so as an investor, like I need to believe what Aki and Faizan are telling. Like I don't want to have to crawl through every like accounting detail and read every piece of legal paperwork and like that's just way too onerous. So there's a level of trust from the investor to the entrepreneurs, and vice versa, because the investor, like we know the game, we live and breathe it. And so often if one or more investors are part of coming up with the valuation and the reasons why, and sort of like that's what a lead investor does with the founder, is like set the early terms. if that's done and there's trust both ways, that can work really well. But to Stephanie's point, like too often you'll see a founder come in with a valuation that is just off market, and it's kind of you don't want to, it feels like you're a chump trying to like tell them like you should actually, you're not going to get funded at that level, because it is self-serving as well. Like so it's kind of weird being an investor giving advice, because you're trying to help out, but yeah, at the same time there is a self-serving aspect to it. But yeah, just coming up with a valuation with investors as part of that discussion makes a lot of sense.
I've got one last question. Graham's asked to you, Steph and James, what should founders be offering angel investors? If angels are looking for an engaging place to put their money, which you mentioned, but also obviously you talked about it's early stage, there's good financial gains. Just the engaging place seems pretty mushy relative to later rounds where valuations are easier to pin down and dilution starts to mean something. Steph, or James, would either of you be happy to speak to it?
I can answer the start, and then James can correct me.
Work together.
So, are you asking for the valuation range? Is that?
Well, I guess we could. I don't know exactly. That's the question as it's written. But what are, and maybe founders too. But what kind of vested interest or the range of stake you have in the company?
I guess I can comment on that from giving examples. That's
I know it's not a one size fits all answer, obviously.
Yeah, and it changes over time, and yeah, I think valuations are growing a bit right now, but still, you can still find reasonable ones. Where I was, that deal I did back in 20, whatever it was, 15 and 16 at like a $1 million valuation for a company that had, 100,000 in revenue. I probably will have problems finding that again in this environment. Now I think what I'm seeing with some of the examples I've done recently is companies that have, 5 to 10,000 in monthly recurring revenue. The will be, let's say, 2 to 4 in terms of $1 million as a pre-money valuation. It depends on the industry. Some of them some could start higher than that. When you get into revenue of like 50 to 100, and it's also growth too. It's not only revenue, but it's how quickly that revenue is growing. That will add an additional level of I think interest for investors. So for that reason, I think you could demand the valuation might be slightly higher in those cases. And also where there's a huge market opportunity, that's also gonna figure into things in terms of evaluation. But so yeah, 50 to 100. And honestly, this is such a ballpark, and this is just based on like a sample size of deals that I've done. So another investor may have different numbers, but I guess I'm seeing more 10 to 20 million type valuations. 10 to 25. I don't know, James, what about you?
I think if I could pivot there a little bit, I'm not sure. The other side of that question is kind of how much of the company are founders offering to the investors? Like Aki, you said you knew how much of the company you were willing to kind of give up, and or how much you wanted to keep. Could you speak to that at all? And then we'll wrap it up.
Sure. So and again, there's no hard and fast rule, but I I sold 30%. Sorry, that's not true. I kept 10% for option pool for employees and advisors and sold 20% of the company. So I have 70% right now. From my next, obviously starting to do some calculations for my next, next round and next 2 rounds. In my head, I'm thinking 50%, but that's also not a hard and fast rule. It's my goal. We'll see if it's possible.
And Faizan and James, on a kind of last note, do you have anything you want to share there?
I'll let James go.
Yeah, I'm involved with a number of startups like over the last 5 years in helping to set valuation, and lately I now like involve a couple other angels that are quite in the market in different areas than me, and so we'll often have a conversation with the founder around setting the valuation, and kind of we give what we think the range can be, and as Stephanie says, like comparable, so recent startups, what metrics they were at when they raised and how it went to. So it's a very inefficient market. It's not like the stock market. So there's not too many data points. It depends on many different factors as well. But yeah, it is kind of mushy trying to set that early evaluation for sure.
I think we're kind of back where we started, right? Maybe a good note to end on. There's that mushy and messy phase.
Yeah,
and
messy.
I hope we've been able to bring enough insight into how you can formalize that and make the most out of the opportunities that are there in that early phase and then later as well. But I'd like to thank all of you for your time. I could obviously keep asking you questions, and I'm sure we've hopefully shared a lot with everyone who's come and joined us today. So I really appreciate everyone's time, presenters and the audience. Thanks for joining us. Anyone feel free to ask me follow-up questions, or Amanda, any of the emails that you've had correspondence with from Douglas will be able to reply and put you in touch with anyone you're interested in speaking to. Thanks again, everyone.